John Greenwood, Invesco's chief economist, also the architect of the Hong Kong dollar peg, joins us this morning in our First Up studio. John, good to see you in the flesh here in Hong Kong.
Good to be here, Susan.
John, I mean, these are very, I guess, tenuous times, aren't they, on the markets? What's going to happen with Europe? Is the U.S. recovery stable? And then the question about China. How are you reading things?
Well, as you say, investors are very uncertain about the business cycle outlook. And until those uncertainties are resolved, I think markets will tend to be a little bit volatile, this risk-on, risk-off trade. In my view, there are three big questions. One is what happens in the U.S., whether the Eurozone gets resolved, and thirdly, how China picks up.
Which one do you want to tackle first? Let's start with Europe, and I'm sure that's probably foremost on people's minds. What's going to happen in Europe? You got political wrangling, pushback from the constituency and the people because of these fiscal austerity measures. But if you don't, have fiscal consolidation, you're not going to get your debt under control. What's going to happen in Europe?
I think we'll see a struggle by the elite to keep the Eurozone together. But the economic forces mean that austerity and so on means virtual stagnation and recession for the southern belt, the southern zone, Club Med countries as we call them, whereas the northern countries of the Eurozone will only grow rather slowly.
But will Spain need a bailout though, John? Potentially.
There are still a lot of bad debts to be written off. The banks need further capitalization. And, of course, government spending is rising all the time. The most important thing, though, for all those countries is that they're in recession. So the GDP, which is the denominator in the debt-to-GDP ratio, is shrinking. So all those debt ratios are still rising. That means there's a high probability of them missing their undertakings, their targets for debt ratios.
Yeah, and manufacturing is contracting as well. I was speaking to a few investors, and their base scenario is for a mild recession in Europe. Is that underestimating the case, though?
No.
No?
I think because Germany is in very good shape. Germany is the only country really in the world that deleveraged between 2000, 2010, 2011. The leveraging up in the other countries is what's caused the problem. So the recession is deep and continuing in southern Europe, but it's being offset by quite decent growth elsewhere in the northern part. So the overall numbers for Europe are not so bad, and most of the several of the southern countries are really quite small.
Okay. Well, what about the U.S.? I mean, people use the term decoupling because it looks like they're not really being affected this year yet with the ongoing problems in Europe. But do you believe in the U.S. recovery, especially when you still have, people, 8% of unemployment and jobless claims are going up, not down?
It's a subpar recovery. It's a slow recovery. But in terms of employment, unemployment is coming down very slowly. But if you look at it from the employment side, the U.S. has added something like 4 million jobs since the trough of the recession. If they added another 4 million, that would get them back to where they were at the peak of the boom. So they're kind of halfway. They're doing pretty well.
Will they have to unleash another round of quantitative easing?
That's not clear. At the moment, I would say no. Provided that we continue with sort of 2 to 3% growth, it probably won't be necessary. What's key is that the banks are repairing the balance sheets quite rapidly. And we're seeing banks starting to lend again. The issue is that households still need to deleverage, and shadow banks are still contracting their balance sheets.
That's a long process, John, which will take many, many years.
Yes, but the U.S. is far ahead of most other countries in the deleveraging process, and that's why the U.S. is kind of leading out of this downturn.
Okay, so let me also tap your experience as well, because you lived here in Hong Kong. You were on the currency board of the Hong Kong Monetary Authority 40 years. How are you viewing China and the slowdown? I mean, it's not a hard landing. Do you want to use that term? I mean, do you use other terms?
No, I wouldn't use that term. China's average growth rate is going to be somewhere around 8%. But because the peak growth rate was 10 or 12, it's been slowing down rapidly. And we should expect China's growth rate to fluctuate between something like 6 on the low side and 10, 11, maybe even 12 on the high side. We had 10, 11, 12% growth rates when exports were booming before the Lehman crisis.
Right.
And now we're seeing something much lower. Second thing to say is that over the last couple of years, when China first put their foot hard on the accelerator with money and credit surging, recently they've had their foot on the brake. What we urgently need to see is that they do not once again put their foot hard on the accelerator.
Right.
That would be a big mistake.
It's a managed slowdown.
So what we need is for them to take their foot slowly off the brake, ease up on the tightness, but not hit down on the accelerator again.
Okay. Now, because of your expertise in the currency markets, I know you helped architect or basically design the Hong Kong dollar peg. What about the yuan loosening? Now it's a 1% moves on either side of a midpoint. What does that say to you? What does this move say to you?
I think that indicates to me that we're likely to see the yuan trade in a fairly stable range over the next few months. China's trade figures have been notably weaker over the last few months. The foreign exchange reserves in the back end of last year actually fell, and those kind of things mean that the overall balance of payments is weaker.
Right, but are we getting to convertibility by 2015? Are we getting to more internationalization? No?
We're seeing some internationalization, but I would say that it's token rather than substantive. It's obviously in Hong Kong, and that's of huge benefit to Hong Kong.
Okay.
But then they're not allowing the yuan to be freely used overseas for all kinds of purposes. And what that means is that they don't want the implications of that for interest rates and so on to be coming back and impacting China from overseas. It would be much better for China to liberalize slowly and deliberately at home, which they're rather dragging their heels on, than to have to react to changes overseas in the offshore markets.
Right, okay, I see. So we're not going to see a freely floating currency anytime soon.
No.
John, thank you so much for dropping by.